Get Rich Slow with John Wolf. And today I just want to talk to you about a few of the basics of jumbo loans and what makes them different. So jumbo loan is really any loan that's beyond the maximum loan amount set by Fannie Mae and Freddie Mac. And what really separates it in reality is the fact that it is basically a conventional, but it's not government regulated in the way where the federal government actually insures part of the risk for the banks and the investors. So what's different on the consumer end? Well, for the most part, jumbo loans have the same rules as a kind of strict interpretation of a normal conventional loan, but with a lot less exceptions, and the paperwork on them, it doesn't have to be perfect, like you can't have had a credit wrinkle, but it needs to be perfect as in every potential question has to be perfectly answered. So where on a conventional loan, a client might have to produce, 7 documents, that same client, if we were just doing a jumbo, there might be 24 documents asked for, to get the bottom of that, like one account transfer that led to another that went down a rabbit hole. That kind of thing is more normal for a jumbo. Also, conventional loans hardly ever require anything other than down payment and closing costs to be part of the transaction. Sometimes they require 1 or 2 months of reserve for lower credit scores, but what's normal in the jumbo world is to have reserves. That's money that's going to stay in your bank account or remain in your bank account after the transaction is complete, of 6 to 12 months worth of payments. And that can be a substantial barrier for people. That can make it hard for them to also do the 20% standard down payment for a jumbo loan. Now, there are 15%, 10%, 5% down jumbo loans as well. So sometimes somebody starts wanting to do a 20% down jumbo and we switch to a 10 because we have to show 15,000 plus in their bank account to make the reserve requirements at the end of the transaction. And that's all fine. One thing that's also really important to know is that jumbo loans are differentiated products, like very different between different lenders. Because they're not directly government insured, any bank can sort of make up any rule they want for why they're going to approve or deny a jumbo loan. So the way I think about it is to get clients ready if we're going to do a jumbo loan is because the biggest difference is just the amount of paperwork that's going to be asked for. So I tell people that whatever amount of paperwork you think a loan should require, it's going to be 4 times that. And if you go in with that expectation and know that you're just going to get asked for another piece of paperwork after another, then if it goes really smooth, you'll be really happy. And when that does happen, you'll at least understand what's going on. Have an awesome day. I'm John Wolf. Like, share, and subscribe. Ask me any questions you want. And I do home loans in Oregon and Washington. So if you need help with any of that, give me a ring. Talk to you later. Bye.